All right, so what's really at stake here in terms of trade? What's in it for the UK? What's in it for us? For more, we're joined by Israel Mkhize, African political economist from Bukindaba. He joins us from our Durban studio. Mr. Mkhize, thank you for being with us. How ambitious is it for the UK to want to be the biggest investor from the G7 by 2022?
Well, the UK is actually slightly having its back against the wall, because if you look at its current economy, Mr. Coney, the governor of the bank in Britain, recently said that since the referendum of the Brexit, Britain has lost about £40 billion to date. And also there has been a 2% decrease on their GDP. That's actually pushing, obviously, the inflation and also a lot of pressure on their domestic currency, which is the pound. So it's rational, therefore, to start to think outside of the European markets. You'll also realize that countries are starting now to forced to choose whether they want to trade with strictly Britain or EU countries, or are they going to be trading with both? For instance, such choices have had to face the countries such as New Zealand, Australia, and Japan. We've seen America quickly saying that no, they're going to continue their trade with both EU as well as Britain. So they do have that bit of a panic that, you know, with the pressure on the domestic demand as well as their regional Europe, so to speak, trade barriers that are now coming with the effects of the Brexit, they're going to need to find new markets.
And what is best for South Africa? So there are a bit of there are hurdles if you want to trade with the EU. You have to meet strict criteria, but once you're in, you're in. But the UK now has freedom to negotiate trade terms with anyone it wants. So should we be playing in both spaces?
Well, I think what defines the new parameters is a very good move that was made by President Ramaphosa on this last BRICS summit. Recently, when BRICS was meeting, it used to meet South Africa, and the BRICS nations would be here, South Africa hosting. But we saw something different here, where there was sort of an African desk or African integration of other countries with BRICS. As you see that the trip of or the tour of the Prime Minister is South Africa, going up to Nigeria, coming back to Kenya, if I'm not mistaken. So while South Africa will be an initial stop, and also in terms of advantage and what we're going to gain, from the agreements that happened today in different sectors. They are a continuation of what the president went up to do with the Commonwealth Business Summit that happened in London earlier, where he was going to look at least for an 800 million pounds investment from Britain. So to see the Prime Minister coming into our country, it's telling us that there is a follow-up. There has been positive news on that. However, it then comes down to how are we going to cascade in terms of the local baskets, the local industries, the local businessmen. What deals are they going to be making through different structures of such as Business South Africa? What deals are they going to make specifically for their sectors to benefit from these investments that Britain is saying is going to channel to South Africa? That's
when the businessmen meet the other businessmen. My question, Mr. Mkhize, was should we be courting both the UK and the European Union that will be separate after Brexit?
Of course, we have to be a little bit cautious in every form of trade. I mean, when you look at economies are always looking for integration. And when there's a disintegration, there's always a story behind that. We talk of regional integrations. When regions and so on disintegrate, there's obviously certain trade wars or currency wars or certain losses that are being incurred. So we need to be very careful that we obviously don't antagonize some of our trade partners. Of course, Britain is our it was our 8th, then it came up to 6th international trading partner. So we have to look at our strategic advantage with Britain, while not, of course, putting off the table what the rest of the European Union might bring. Of course, we are in a better position since we're in BRICS. We're part of a group that has 1 or 2 countries that are in the Security Council that are permanent, and also with growing economies, largest growing economies in their region. We're also part of a continent that is projected to be going to be growing by 6% towards 2023. The one that Brexit is, Britain is saying they want to be intensifying their investment, because the trajectory is that the growth projection into Africa is going to be around on average of 6%. However, we always have to look for our own a particular interest in terms of industries. For instance, if you go to Dubai, you cannot do business in Dubai if you're a foreigner without getting a partner in Dubai and that partner actually taking a majority stake. So those are some of the things that we can look at in South Africa and say, okay, these new investments, which are very important, the target the president has set, but what is in it for local South African companies?
Well, I'm glad you raised the high growth rates in Africa, although we're not seeing that in South Africa. But for the continent as a whole, is this a plus? Theresa May coming, it's been a delayed visit to Africa, which was once the next frontier. There was a big push. Are we as a continent in vogue again, people seeing the opportunities again?
Well, of course, since 2013, it's the first visit of a British Prime Minister. That's number one. And this new interest, of course, it's sparked by competition. Looking at how China has increased its investment in Africa. I mean, you look at the Chinese investments in Kenya, Chinese investment in Sudan, in South Africa. So obviously, Britain is trying to catch up with the rising continent, if I can call Africa that. However, what Africa should do is obviously to go back to those structures. Before we had IPSA, now we have we had then OAU, now we have the AU. There should be certain things. For instance, what is stipulated in Vision 2063 that talks about how the regional search for peace and democratization of our space, and the fourth industrial revolution, which increases the use of technology. And also this important factor of an Africa that is growing young in terms of population. We need to see that each deal must benefit young people, and it should not be all the growth that is, or economy that is driven by incurring debts or loans, because then that compromises the youth in the future in terms of always having to take a big chunk of our revenue or our GDP towards servicing debt. But in this case, we need to make tough, of course, negotiations where we say our local companies, these are the stakes that we're looking at with this global or British investment in particular to Africa and South Africa.
So you're saying maybe put conditions on new investments. This is a long-running debate in South Africa. Can we really do that when, given our poor economic growth, we don't have much to offer? Some people are saying we should be happy that she's even included South Africa in this tour, given where we are in comparison to growth rates in the rest of Africa.
No, that is not a correct view. In fact, should not be here if South Africa was not on a growing trajectory, in particular with certain things that have now been put in place. I mean, it's even interesting for me to see a prime minister from a country like Britain coming to South Africa while there's a heated debate on the distribution of land. And the execution of the land expropriation policy, where America has taken a stance that is a little bit aloof and hostile. It tells me that there is something that is of an unsettling situation within the local currency there and in the investment community in Britain, which makes them to really want to go out. And because they're in that stage, it then puts us at an advantage to say, let us be tough on our negotiation, in particular when we are looking at the long-term benefits, more so on the small micro enterprises of our countries, because there's the sector in the main that should be driving the growth of the economy, as well as to absorb more of people from the labor market. We cannot really grow an economy by investing more on the state-owned enterprises. We grow the economy more from investing on the small and medium enterprises. That's where tough negotiations then that has to happen. And I'm quite confident that after this, the business community then should come closer to the state to understand the deals that have been signed, because they're in a lot of sectors, from technology, education, infrastructure, energy. So you look into all those sectors and say, what has been placed here? And also, we need to notice that these deals are bilateral, which means, therefore, what the UK or the Londoners will be benefiting from our own economic base. We also have to send our own business guys to go and look for opportunities in those spaces, being protected by these very agreements. We can go up now and say, what are things looking in the bond market in the UK? How are things looking in the construction market? How are things looking in energy, if they do have? Because we're now protected by these bigger agreements that are signed at the highest level.
All right, thank you for your analysis this evening. Israel Mkhize from Bukindaba Consultants, basically saying overall, this trip, good news for both parties, including South Africa.